This week on Accounting Answers, Michael's asked us, late paying clients are killing my cash flow. Please help.
Well, the answer to that is just like having a toothache. You could either take a painkiller, you can have a filling in your tooth, or you can solve the problem in the first place and maintain good oral health. Now, what I mean by that is your painkillers to solve the problem of debtors not owing you money are something like picking up the phone and manually chasing your debtors, sending them letters or emails to follow them up. And that might get a little bit tiresome, and that's where you can implement something like Debtor Daddy. Now that does automatic debtor chasing, and it all links in with your Xero account. So you pretty much set that, and it does the chasing for you. Or your third option, if things get a little bit too hairy, you can chat to a tribunal called QCAT, and they work with you. It's a free service, a legal service offered in the state of Queensland, and they'll chase your debts through their process. Now, the filling. Now this is where you might want to switch up your business model. Now I can share from personal experience working in accounting firms that what usually happens is we bill hourly rates and we issue an invoice after the work is done, and then all we do is chase the invoice, and 14 days later if you're lucky, or it could be a couple of months depending on how satisfied the client was. But what I did when I started Inspire CA was switch that and say, look, we want to do a great job, but we're not a bank and we want to get paid up front before we start. So we use a industry-specific software, but if you'd like to have a look at proposal software where they need to accept and pay before you start the work, check out something called Proposify. Now the third one is maintaining good oral health, or good business financial health, and this is really a focus on profitability. You may have heard sales minus expenses equals profit, but we don't agree with that here at Inspire. We believe that sales less profit equals your expenses. So you may need to have a look at your expenses, and if you're like most business owners, you actually set your expenses based on your good months. So when it's bad, you're eating into your profit and your cash flow, and then in the good ones, you're catching up from that. So have a look at your expenses and see what's necessary, see what isn't, and make decisions based on your 3 lowest months profitability-wise instead of your 3 highest. So thank you, and you'll see me next week on Accounting Answers.